While the stock market soars to record highs and the frothiness of the 2021 craze makes a comeback, the story in housing is vastly different. This is especially true in the South, where we are witnessing one of the worst collapses in prices since the Great Recession. This isn't just me speculating about the future, it's happening now as we speak. Overbuilding, high rates, low demand, and affordability concerns are plaguing the market, and you're starting to see massive drops that are causing serious panic among sellers in Georgia, Florida, Tennessee, and Texas. Take, for example, this house covered by Reventure Consulting in his latest video. It's a 6-bedroom, 4-bath built in 2005 on sale for $400,000. This house is actually owned by Blackstone, the massive investment firm. They bought this home in 2022 for $515,000. What matters isn't just how far the price has fallen, it's what the drop says about where things are headed. For years, the value of this house hovered between $280,000 and $300,000. Of course, starting in 2020, prices began to go up exponentially following the trends in the rest of the country. By the middle of 2021, the price movement of homes was simply something we had never seen before. Zillow charts truly resembled penny stocks. This home's value at one point nearly goes straight up, and by the summer of 2022, homes were tulip-like, printing value by the month. You could have easily bought a home similar to this, and by closing day, you were so far in the green value-wise that you could turn around and sell it for a serious profit right away. It was endless appreciation. Now, despite these massive gains, investors were not stopping or backing down, and in this example, in April of 2022, Blackstone bought this home thinking this trend would continue. However, it was right around that time that the Fed started raising the rate rapidly, pushing mortgages from around 3.5% to 7% in less than 6 months. This, of course, leveled out the returns, and surprisingly, prices still went up a bit. While the rapid appreciation of 2021 was gone, Blackstone was still in the green with this house as of last year. In April, according to the Zillow estimate, it was valued at $540,000, but something strange began to happen in the months that followed that summer. While everyone was raving about the stock market and even housing, the situation became increasingly worrisome for sellers and even the very model that Zillow relies on. As supply increased and homes piled up, sellers and the math behind the Zillow estimate simply didn't catch up. For example, from May of 2022 to June of 2025, the number of active listings in the Atlanta metro went up 254%. Now, if you look at a chart of home prices in Fulton County, it shows an average decline of just 2.1% from the peak. But that doesn't capture what's actually happening on the ground, and this listing proves it. The home was originally listed in March of this year for $494,000, a modest loss for Blackstone after buying it for $515,000 in 2022. But after 4 price cuts and slashing nearly $100,000, it's still sitting unsold. But the story of this house goes far beyond just this. This, after all, is an investor sale. There's no emotion involved, no family living there. It's just numbers on a screen for Blackstone. An average homeowner would have cut the price once or twice, then pulled the listing, waiting for the next spring buying season to try again. That kind of behavior, waiting it out, keeps prices artificially high. It skews the data because only the best homes are selling. The ones that don't sell are ignored. So when you see a 2.1% drop, you're not seeing the real damage. The real-time listings like this one are the truth tellers because they are being sold by companies who are truly testing the market reaction, and they're signaling something far worse than what this chart is showing. As far as we know, this house and those in this neighborhood are suffering a 30% decline in real terms and still falling. The fact is, it can get even worse, and no real metro-wide price chart is reflecting this yet. We need many more inputs to get a reaction from the models and the averages. Simply put, there's an untold story. How can a house go from an estimated $540,000 to less than $400,000 in months? Clearly, the storylines and statistics are not capturing the true damage. And part of the reason is this investor versus regular seller debate. Like I mentioned earlier, it's very hard to move a market down if you're in a good economy with real families buying these houses. Put simply, if I buy a house for $300,000 on a 30-year mortgage and have a good paying, constant job, I really don't care if the value is $200,000. Technically, yes, I'm in the hole or underwater on the mortgage, but I'm still going to make my payments and continue living there. At that point, I have no incentive to sell. The only people that are very sensitive to values is really motivated sellers, which are mostly investors and builders. And as Warren Buffett has pointed out, real estate behaves very differently than stocks. In stocks, price discovery happens fast. In real estate, nothing happens until investors or builders start cutting prices. That's why we see these long plateaus on the charts where prices just stall. But once reality kicks in, once those forced sales begin, the move down can happen all at once. You can hear Warren describe it in this clip from 2005.
The swing in properties values has just been huge. And what we see in our residential brokerage business, and we're in I don't know how many different states, is we see a slowdown every place. Now, we see it most dramatically in some of what have been the hottest markets. And the markets where you're going to, in my view, you're likely to see the greatest fall off and where you've had the biggest bubble are the ones tend to be the high-end market, and they tend to be ones where people have bought for investment or speculation rather than use. $100,000 for a house and mortgage it for $270,000, and if the value goes to $250,000, if they have a job and everything, they won't move out. I mean, you don't lose a lot of money, even though the market value on a given day is less than the loan value when families stay together and employment is present and all that. But when you have investment type holdings or speculation type holdings, when you in effect have had the day traders, of the internet move into the day trading of condos, then you get a market that can move in a big way. First, it sort of stops, and then it kind of reopens. Real estate is different than stocks. If you own 100 shares of General Motors, it's going to trade on Monday, and that's what it's worth, and you can't kid yourself about it. But if you own real estate, there's a great tendency to think about the one that sold down the street a few months ago. And there's a great tendency to think, you only need one buyer who hasn't gotten the word that things have slowed down, and you'll make your sale.
So really, as you just heard there, this investor price discovery is happening right now in places like Atlanta. In the example we went over at the start of the video, you have a house that despite a 30% drop in value still can't sell, and you have to wonder what's happening to values overall. The actual price chart for the Atlanta metro is likely reflecting only the best houses, as the ones that can't sell without significant drops are simply being pulled from the market. This is especially true in a low transaction environment where very few data points actually structure this line in the first place. The true damage is hidden, and once the veil is ripped, everybody will understand the swamp holding up this house of cards. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know what you're seeing on the ground as a buyer or seller, especially if you're in the Atlanta metro.